Hey, this is Warren Redlick. Thank you for watching. I want to do a little bit of a dive into what's coming in the Q2 earnings call. Monday, July 26th, Tesla will report its earnings. There'll be an investor call. I want to go really quick through the Q1 investor report just to show you some numbers I think we should look for in the Q2 earnings numbers and talk about how that matters for Q2 and really more important, how that matters going out into 2022 and beyond. Are you ready? Let's go. So the biggest thing to watch for is the revenue numbers. And you can see in the top blue box, we're going to see automotive revenues. Q4 2020 was the first time Tesla went over not only $8 billion in automotive revenue, but over $9 billion in automotive revenue. They got to 9.3 billion. Q1 21 slowed down a little bit because of the lack of Model S and X deliveries, and that dropped to 9 billion. So I am looking for that number to go over 10 billion. I'm going to explain why. Tesla delivered over 200,000 cars in the second quarter. When you figure that average selling price is probably over $50,000 a vehicle, there's a bunch of reasons for that. That gets you to $10 billion in automotive revenue. 200,000 cars times $50,000 is $10 billion. You add in that there's some Plaid deliveries, which are much higher than $50,000. You add in that Tesla has removed for sale some of the lower priced models and Tesla's increased prices. I don't think this number is going to get to 11 billion. My estimate is around 10.2 billion. Watch that number. Is it 10.2 billion? Is it under 10 billion? Does it reach 10.5 billion? The higher that number gets, the more promising that is for Q3, Q4, and beyond. Now, in the second blue box, you see total revenue. And again, Q4 is the first time they went over not only 9 billion in quarterly revenue, but they went over 10 billion in quarterly revenue. They almost reached 11 billion in quarterly revenue in Q4 2020. Fell back a little bit in Q1 2021. Very, very likely this number breaks 11 billion. There's a chance that they break 12 billion in Q2. That would be a really big number. That's again a number to watch for. What happens to Q2 total revenue for the company? If they break 12 billion, again, that's a very positive sign looking forward to Q3 and Q4 and beyond into 2022. If you check my recent video about what's coming in 2021 and 2022, you'll see how those numbers come into play and why that's really important. The next set of numbers to watch is operating expenses and other expenses. So you can see here the blue box next to my head is operating expenses. And you can see that they went up quite a bit to $1.6 billion in Q1 2021. Those numbers are going to go up again. We've got a bunch of different factors that are raising expenses. Number one, when you make more cars, you use more material, so expenses go up. On top of that, the environment, the supply chain problems, a lot of other things have caused costs to rise. So we'll see how much that rises. I think it's going to rise less than revenue, but we'll see. You can see Q1 2021 operating expenses increased while automotive revenue and total revenue decreased. So on those numbers, that wasn't that great. Now down below, the lower box is capital expenditures. And we can see that's a negative. Tesla is spending money on capital. That's a negative to cash, because they're spending so much money on capital. We know that Berlin and Austin are scaling up. We know that there's some spending going on in Nevada for the semi lines. So my guess is that number gets larger, or a larger negative number on cash flow. That's another, it's not treated as an expense, but it's effectively an expense that pays off in the future. Capital expenditures mean this is stuff that's going to produce revenue later. But I expect that number to, right now, is 1.3 billion, negative 1.3 billion in Q1. That's probably going to go higher, maybe negative 1.5 billion. And it doesn't really matter a whole lot what happens with that number. If you see a really big number, they've talked about pulling investment forward. If the number's down, it's not actually necessarily a good thing. You know, less cash is going out for CapEx, but that means less is being invested for the future of the company. So I'm expecting that to maybe go to 1.5 billion. But we'll see. It's really, really hard to predict that one, and it's not clear how much it matters. I think it matters quite a bit, but it's not clear how to interpret it. How do we interpret when we see that number going up or down? Next up, let's talk about profit numbers. These are numbers that Wall Street is more likely to look at. God help them. I'm not a huge fan of Wall Street, but these are numbers they're more likely to look at. So you can see next to my head, you can see total gross profit, and you can see that total gross profit has gone from 1.2 billion Q1 2020 to 2.2 billion in Q1 2021. So overall, Tesla's gross profit is growing. That's a number to watch for. Gross profit, there's a lot of different things that go into it. There's other things that come out of that, so it becomes a little less important. There's 3 more boxes below that. You can see net income attributable to common stockholders, GAAP. That is the type of number that is more likely to go into Wall Street earnings reports. And you can see that number has been rising pretty steadily and reached 438 million in Q1 2021. Very likely that number goes over 500 million in Q2. There's a chance that expenses have been really bad and it keeps that number down, but I think fairly likely it goes over 500 million and maybe reaches 600 million. If that number gets significantly over 500 million, that's a really positive thing for the future. The next box below that is earnings per share attributable to common stockholders. This is one of the most common things that Wall Street looks at, is earnings per share. And we see right now that it was 0.39 or 39 cents a share in earnings in Q1. I see that number growing to 50 cents a share. But again, very, very hard to predict what happens with earnings. We have a very volatile expense environment. So very hard to call that. My gut is that number is going to go up to 50 cents. The more above 50 cents a share it goes, the more Wall Street is going to react positively to the numbers. Some on Wall Street look at the number below that, and we see 93 cents a share was reported in Q1 2021. So we'd like to see that go over $1 a share, of course. Wall Street is predicting only 90 cents a share for Q2, which is a little baffling since they did 93 cents in a tough quarter in Q1. I think we should see over $1 a share in Q2. We'll see what those numbers reach, and that's a number to look at. I personally think earnings are a lot less important than revenue, that revenue is growing. The reason earnings should be going up, in part, is because production has shifted to Shanghai. The share of production, the share of vehicles that Tesla's producing, Shanghai is increasingly taking more and more of a share of Tesla's production. It's mostly Fremont, but Shanghai production is growing. It costs Tesla a lot less money to make a vehicle in China than it costs to make one in California. So the mix is shifting to lower cost production while the price is still going up. And then going forward in the future, we're going to see a shift towards Berlin and Texas, where costs again should be lower than Fremont. And both because of local sourcing, because of local customers, and all of this lowers costs for Tesla overall because vehicles won't have to be shipped. A lot of really big advantages, but that's looking forward to really into 2022 when Berlin and Austin are up and running at are growing their operations and Shanghai is running at full steam. We should see lower costs per sale and thus higher margins and higher profitability. The last box at the bottom is EBITDA or EBITDA, which is earnings before interest, taxes, depreciation, and amortization. This is a somewhat common number that some people on Wall Street and other investors will look at. That is a form of profit. It is the number that is used to determine when Elon Musk is going to get an additional tranche of shares in his stock compensation for the company's success. What we see for the last 3 quarters is EBITDA has been around $1.8 billion. That should go over $2 billion in Q2. It's been steady around $1.8 billion. A lot of good things have happened. The only bad thing is, yes, some expenses have gone up, some costs have gone up, but I'm hopeful we're going to see that number go over $2 billion. If it doesn't go over $2 billion, I'm expecting Zach Kirkhorn and or Elon Musk will talk about all the costs in the supply chain that went up and why that made it difficult for profit to go up and why expenses went up so much. Now, the last thing to look at here from page 4 of Tesla's financial report, it's page 4 of the Q1 report, probably be the same page in the Q2 report, is cash flow. We can see that cash flow has been positive for 4 quarters in a row. Tesla's cash pile has been growing. And you can see in the row below that, the total amount of cash they have. Oddly, free cash flow was up, but the amount of cash and cash equivalents went down. This is the way accountants work. I don't fully understand it, but you want to see free cash flow be positive, and you'd like to see the cash and cash equivalents go up. I did see that Tesla is paying off some bonds, but that's going to be in Q3. So the Q3 number, we should see a drop because some cash is going to go to pay off bonds. Paying off debt is a really good thing. I think it was at like over 5% interest rate. So that's a really good thing going forward. You don't want to be spending money on interest. So really quick, another line to watch for: how much cash does Tesla have on hand? If they have 20 billion on hand, that's a good sign. I don't think it'll be that high. if free cash flow is positive and let's say it's over $1 billion, which happened 2 quarters in a row, that would be another good sign. We don't know how difficult the operating environment is with all the supply chain things. I think that's the thing that they're going to make some kind of comment about the supply chain, so we'll watch for that. Next up, we sort of know these numbers already. On the top box, we see Model S and X production and Model 3 and Y production. Tesla already revealed these numbers. It was over 200,000 total. It's going to be close to 2,000 Model S's and X's and in the ballpark of 200,000 Model 3s and Ys, with a total production in the ballpark of 200,000. There'll be some slight increase from what they did in their press release, but that should be small. And then we see deliveries, same thing. Deliveries and production closely track each other. If you have leftover vehicles at the end of one quarter, you might see more deliveries than production in the next quarter because you had leftover vehicles that weren't quite delivered yet. But those numbers track each other pretty closely. You don't see a lot of divergence from them. Some quarters one's higher than the other, some quarters the other's higher. We already kind of know what these numbers are going to be, so I don't expect to see a lot of big difference. The box below that, just above my head, is global vehicle inventory. And you can see that Tesla's inventory has been dropping steadily. Only 8 days of supply on hand at the end of Q1. Pretty likely that this number is going to be even lower. Tesla has sold out every vehicle, it seems like, for months ahead, maybe even the entire third quarter, if not longer, for Model Y. So it's hard to get below 8, but I think that number may come down a little bit to 7 or 6. The lower that number is, the more you realize how much demand there is for Tesla and how difficult it is for them to supply enough vehicles to meet that demand. Next up, this is potentially really important numbers. How much solar is Tesla deploying? How much storage is Tesla deploying? That's the first box. Tesla has been growing solar deployments and mostly has been deploying storage deployments. Q1 was a drop-off from Q4, mainly because Q4 was such a big quarter. My gut hunch is that Q2 will be significantly bigger. I don't know if it's going to pass Q4 2020, but it should easily be more than 1,000 megawatt hours. If it reaches 2,000 megawatt hours, that's a really good sign. Solar should break 100 megawatts. That would be a good sign. The higher these numbers go, the more that means that Tesla is accelerating the transition to sustainable energy through delivering solar and grid storage devices and power walls to people. I believe that Elon said there was a chip shortage holding up Powerwall production, so that may delay both. What I've seen on the ground, it does seem like Tesla's getting a little bit of progress in delivering solar products to consumers. Here in Florida, I think they are starting to do installs. I wasn't able to get my solar roof, but I am under the impression they are moving forward with solar roof deployment in Florida. I think they're making more progress deploying solar generally. So that number should go over 100 megawatts. 120 megawatts would be nice. So that's when you see that the higher those two numbers go, that's a really good sign. Next, store and service locations and mobile service fleet. We're seeing those grow. I don't expect to see a big jump in those numbers compared to Q1, but they should grow at least a little. So maybe we reach 600 store and service locations. Maybe the mobile service fleet tops 1,000 vehicles. These are both well within the realm of their current state of growth. It would be a little bit too much of a jump for mobile service fleet to reach 1,000, but 950 should certainly happen, and 1,000's possible. And the last box, supercharger stations and supercharger connectors. It didn't grow that much from Q4 2020 to Q1 2021. We know the China factory is up and running with a potential capacity of 10,000 chargers a year. So and then Buffalo is producing something like 3,000 or 4,000 a year. So we should be seeing that number grow faster than what we saw from Q4 to Q1. I'm guessing we're going to see something like 27,000 in the supercharger connector list, and maybe it goes higher than that because maybe there was a lag between Q4 and Q1. So if that number goes up, that's a good sign. If it doesn't go up that much, that could be, again, an indicator of supply chain issues or chip shortages. So we should clearly go over 25,000 connectors. 26,000, I think, is likely to pass that. And then if it gets to 27,000 or 28,000, that's, again, another good sign that they're really getting supercharger production up and they're getting supercharger installations up and getting more superchargers, more supercharger stations, more store and service locations, more mobile service fleet makes it more attractive to own a Tesla because all of these things that you're going to use are now more available to more people. Now, this is a really big thing to watch for. This is Tesla's annual capacity chart. It's on page 7 of the Q1 report. And you can see above my head that California was slated for 100,000 Model S's and X's, Model 3s, 500,000 Model 3s and Ys. Elon has said he thinks they're going to get Model S and X capacity higher than 100,000. So it'll be interesting to see if they adjust that number up. We might see that number go up to 120,000. We'll see. I mean, they're not producing at that volume yet, but the goal is, can they get to that capacity? Remember, it's capacity and not actual production. So I think Tesla's capacity for producing Model S and Model X might go up from this number. We'll see. This number doesn't necessarily affect reality because when Q1 ended, they weren't really producing Model S's and X's and they still listed production capacity to 100,000. But I think that number really practically goes up to 120,000 and maybe it goes up to 150,000 long run. Model 3 and Model Y in Fremont, I don't think the capacity is going to go up much from 500,000, maybe a little. And I'm not sure they're going to reflect it in their reports. Shanghai is listed at 450,000. From everything I'm seeing, they're significantly scaling capacity of Model Y. Model 3 is still growing a little bit. I think ultimately we're going to see Shanghai reach close to 600,000 capacity. And again, it'll be interesting to see, is that reflected in this box up above? To my right, and I think your left, you see Berlin Model Y, Texas Model Y, Cybertruck, Semi-Roadster, and future product. Model Y is already in construction. They're getting ready to start producing Model Ys in Texas and Berlin. We see Cybertruck was listed in development. There have been a lot of rumors that Cybertruck facilities are now under construction in Texas. So the in development bit here for Cybertruck should change to construction. The Tesla Semi that says in development, we believe that they're under construction for that in Nevada, so that should also change to construction. I don't expect any changes in Roadster or future product. I do expect we'll see Semi change from to be determined to, say, Nevada. Now, maybe they still have plans to manufacture Semi in Texas instead of Nevada, but right now it looks like they're building production facilities in Nevada, so we should see both of those change to construction and Tesla Semi to indicate Nevada. I don't think we're going to see any change in Roadster or future product being in development. I don't think we're going to see any other changes on here, except I think it's possible we'll see in development for Model 3 in both Berlin and Texas, but more likely they're going to leave that off. I do think Model 3 production is coming to Berlin. It has to. It only makes sense that they would build Model 3 in Berlin, unless future product is going to be so compelling that they're not going to bother making Model 3s anymore, and a future product is coming quicker than we think. Future product, of course, being the 2023 Tesla Compact that was announced at Battery Day.
We're confident that long-term we can design and manufacture a compelling $25,000 electric vehicle.
Some people call it Model 2, some people call it Model Q. We'll see whatever it's going to be. But that future product may come. If it comes sooner, you kind of wonder, why aren't they in development on Model 3 in Berlin and Texas? And the only reason in my mind could be, is Model 3 going to be made obsolete by future product? Next up on page 9 of the Q1 report, we got more information about energy storage and solar. So I think we're going to see more detail here. It'll be interesting to read the finer points of these details and see if we get more information about what's going on with energy storage and what's going on with Powerwall. We know that CATL is scaling up production of lithium iron phosphate cells. We know that Tesla is planning to use lithium iron phosphate cells for Megapack. We know that Tesla just changed their page on how you order Megapack. So it may be that we're going to start seeing a scaling up of Megapack, and that may be reflected here. There may be some information in here that talks more about developments for Megapack. Powerwall, we know Elon said something about there's a chip shortage that was holding up production of Powerwall, so that may also be reflected in the energy storage paragraph. Next, we have the solar retrofit and solar roof. This is roughly the same as what we saw on the previous page, but notice here they specifically said that solar roof deployments had grown very radically. So there may be a specific mention of how much solar roof deployments have grown. Solar roof is a high value, high revenue product, so that should be a big boost to revenue. On page 10, they make forward-looking statements about what they expect for growth, and they said we expect to achieve 50% average annual growth in vehicle deliveries over a multi-year horizon, but in some years we may grow faster, as we expect to be the case in 2021. Will they say they expect growth to be faster in 2022? I'm seeing close to 80% growth in 2021, and I think we may see more than 100% growth in 2022 in vehicle deliveries. We'll see. That may be overly optimistic, but with battery supply increasing, the growth has to go somewhere. So either storage is going to go up or vehicles are going to go up. One of them has to go up if you're going to get a lot more batteries from suppliers, as they have said in the past. Now, in the box below, we see the talk about building Model Y capacity. This is, again, a spot we're going to see some description. And they said Tesla semi deliveries will also begin in 2021. Well, that was a factory that was in development in the same document. So obviously that has to be in construction if you're going to deliver in 2021. Will there be more information here in this product box that will help us understand what's going on? This is something to watch for. I don't think this will necessarily be materially different from what we saw in the earlier pages of the document, but you never know when you're going to get a nugget of detail here. One thing I forgot to mention, up above here you see total revenues at 10.389 billion, where automotive revenues are 9 billion. What we typically see is the additional revenue, the gap between the 10.4 billion and the 9 billion, ends up being about 15% of whatever automotive revenue is in that given quarter. So if Tesla reaches $10 billion in revenue, then 15% of that would be 1.5 billion, and you'd be at 11.5 billion total revenue. If automotive revenue goes significantly over 10 billion, that may help them reach the $12 billion total revenue number. Or it may be that the additional revenue grows faster than the 15% number, and that could also put them to 12 billion. And if we see that, that is also something that comes from an increase in solar, an increase in storage. So a lot of different ways this can happen. On top of those earnings numbers, which we'll get just before the earnings call, we'll have the earnings call itself. And we never know what nuggets of information will come out of the earnings call. Now, they've changed the way retail investors ask questions. It used to be that YouTube personalities and Twitter people were able to get their questions upvoted on, say, technologies, and our questions were more likely to be asked. They've changed that so that the nature of the questions is going to change. How they curate the questions will be interesting. There's always some sort of question from an analyst. A lot of times we don't get a lot of additional information out of the investor calls that wakes us up. But I listen for every nugget, and we'll pick up a few nuggets of information that will help us, like the investor call where Drew Baglino said that they expect to more than double the supply of cells, battery cells from suppliers in 2022 versus 2021. Little nuggets like that slip out and help us make projections for where things are going in the future. Will Elon say something off the wall? Will Zach Kirkhorn say something? We just don't know what's going to happen in the investor call. So just sort of listen to the questions, listen to the answers. Let's see what's coming. Will they reveal something about 4680? Will they reveal something extra about Cybertruck? These are all things we're waiting to see. If you want to get into this more, please check out this video where I talked about the 2021 and 2022 numbers for Tesla. Check out my other videos. Please support this channel on Patreon here. Check out the merch, the stainless steel mug, the t-shirts at elonbits.com. Link in the description below. And thank you so much for watching.